Now, I will request Sri Shailesh Sheth, eminent advocate, to deliver his valuable speech to all of us. Mr. Shailesh Sheth has over 30 years experience in consulting, advisory and litigation practice in the field of indirect taxes. Mr. Shailesh Sheth has detailed extensively in the areas of central excise, service tax, customs, GST and CST VAT areas. Mr. Shailesh Sheth has been a regular faculty in various professional bodies. He is also associated with the Builders Association of India, Indian Merchants Chambers. Now I invite Mr. Shailesh Sheth to come to the dais and enrich us by his vast knowledge and experience. Thank you.
Good morning, rather good afternoon, friends. The TAAB, IILS, all the dignitaries on the dais, of the dais, and dear friends coming all across the state. I'm really grateful to the organizers of this Diganta 2018 event for inviting me to share my thoughts on the burning topic of the day, GST, in the various aspects. It is my pleasure and privilege to share my thoughts on this subject with you today. Yes, I mean, I should be practically ending my talk at this time when I'm starting. So whether it is the start of the end or the end of the start. But I have a lot to cover on this today, and I'm sure that all of you, having come across from such a distance, patiently waiting for the technical sessions, the organizations wouldn't mind if I try to give my justice to the topic to the maximum. I'm here full day. Only two things I would make. I just mentioned. One is, kindly, we will have some very heavy discussion in coming 2 hours. So please switch off or put your mobile into coma state. So, and any questions on any topic not relating to my topics which I would be covering. Evening we have a question answer session. I would try to cover it in the evening session also. The evening session can also subject to organizers' convenience. I have no issue. I can continue late in the night also, or till the time you faint on your chair. I can continue with that. So, friends, whenever I have an occasion to say anything, on the indirect tax, the subject in which I have been involved for 3 decades. I am very fondly reminded of one of my very favorite quotes of Hugh MacLennan, who says, "Man is a thinking animal, a talking animal, a tool-making animal, a building animal, a fantasizing animal, a political animal, but in the twilight of civilization, he is chiefly a tax-paying animal." So we are all destined to be tax-paying animals till we breathe our last. And there is no respite from that. Taxes are the dues which we pay for the membership of a civilization, as has been fondly said. Howsoever uncivilized the society may be, but we keep on paying the dues in the form of taxes for that membership. And as Mr. Majumdar, Mr. Sanjeev Chakravarti mentioned, change is the only, as Heraclitus said nearly 2,400 years back, change is the only constant in the life of a human being. But there are 2 notable exceptions, as we now really know, that taxes and death both are probably exception to this rule, which never change. They remain the constant companions of a human being. And it's very interesting that the taxes are keeping company with the death. So till you die, you have no escape from the tax. Probably there is a hidden message into this. The erstwhile indirect tax regime riddled with so many shortcomings, absurdities, complexities, as well as inconsistencies, that the change was inevitable. One has to find an answer to that. For the 7 decades, the taxpayers of the country, including the citizens one way or another, went on bearing the onslaught of this absolutely anarchic indirect tax system prevalent at the central level and at the state level. And the inevitable solution for which everybody was searching for, finally it was found that goods and services tax, also known as a value-added tax across many kingdoms or many jurisdictions across the world, could be an answer to this. And this is how the things were put into motion in right earnest. I am not going into the history or background of this. So, what could be the objectives behind the indirect tax policy which we would be searching for? We had to look for an indirect tax policy which is economically efficient, neutral in application, distributionally attractive, simple to administer, and at the same time capable of maintaining the autonomy of the taxation powers of the stater and the state, which is guaranteed under the Constitution. Because the federal character of the country economy cannot be compromised. Now, a single tax policy has to answer to all these demands which were required. And from here, the idea of birth GST and the dual GST regime took place, that it could probably give an answer. There are many justifications for the introduction of the GST, many advantages. Considering the topics which I would be covering, I will only mention about some 4 or 5 measures which will be running through the whole topics. As an undercurrent, these objectives, we can always keep it in mind and continuously try to really analyze that how far the GST law, as has been existing, being implemented today, is living up to this particular objective. The first and foremost, obviously, is the mitigation of the cascading effect of the tax on tax, which was inherent in the erstwhile indirect tax regime. Second was the expanded coverage of the input tax credit mechanism, with the seamless credit flow being one of the avowed objectives of the GST, which was being promulgated, which is being projected even today. Seamless credit flow. The third one is relieving the exports of the domestic tax burden. Inherent in this idea is the GST being the destination-based consumption tax. So relieving the exports of the indirect domestic tax burden. Another important objective is, and that is widening the tax base, so with the result of the increased tax collection. Not only indirect tax, but also direct tax also. We have a dismal tax to GDP ratio. We have a dismal number of taxpayers in a country of 130 crores. So, 113. And developing a common national market for the goods and services. And last but not the least is the neutrality of tax, which was important. Because when there is a discriminatory, if a tax policy results into the discrimination, then the economic decisions are taken by the entrepreneur keeping the tax considerations in mind and not other factors of the business, other factors of the production. You have an area-based exemption notification, so even if the economics do not support me, I will go and set up my factory in Himachal Pradesh or Uttarakhand or because there is a tax exemption. This is how the tax considerations have been distorting the economic decision of the entrepreneur in this country. Goods manufactured without added power, there is an exemption. Very goods manufactured with power, there is an excise duty levy. So, I can go on this. So, for decades post-independence, we have had this type of the distortive economic, the taxation policies. The GST, one of the fundamental features of the GST is that it is or perceived to be a neutral tax. It is a neutral in its application. Neutrality is one of the most outstanding features of the GST where it is a subject by itself, economic neutrality, the outward neutrality, international neutrality, domestic neutrality. It's a subject by itself. So these are the fundamental, the major features of the GST which we will have to keep it in mind when we try to understand certain important aspects of the nuances of this law. What is GST? And there are definitions and definitions. I will only cite only two definitions which will actually pick up the essence of this, the tax. It is known as a broad-based consumption tax levied on the goods and services. It is a destination-based value-added tax levied on the value added to goods and services at each stage in the economic chain of supply. Mark each and every word. It is a destination-based value-added tax levied on the goods and services at each stage of the economic chain of supply. Therefore, at different stages of production and distribution, act as mere pass-through, and the tax essentially sticks on the final consumption within the taxing jurisdiction. Credit is made available across the goods and services and even across the states, and GST thus operates as a pure weight. Another such meaning ascribed to the GST is in the International Tax Act of 2005 is a broad-based tax levied at multiple stages of production and distribution, with crucially taxes on inputs against taxes on output being set off. That is why sellers are required to charge the tax on their sales, whether goods or services. They can also claim the credit of the taxes that they have been charged on their inputs. The advantage is that revenue is secured by being collected throughout the process of production, unlike the retail sale tax, without distorting the production decision as turnover tax does. So these two, among many definitions, many meanings ascribed to GST or VAT, captures the essence of the GST. Friends, with this background, the GST being touted as a destination-based tax, consumption tax. Here, the whole philosophy of race of supply rules lies in this destination-based consumption tax. We will see about that. How it is different from the origin-based tax? World over, the policy makers, as far as the taxation regime is concerned, have been grappling with whether the tax should be indirect tax, should be destination-based or origin-based. Ultimately, across the world, it is a destination-based consumption tax. Central sale tax, as we know, is an origin-based tax. It was an origin-based tax. Because if the movement starts from the West Bengal to Delhi or any other state, GST was being levied and the revenue will accrue to the seller based in the West Bengal. It was an interstate sale of the goods. It is an origin-based tax, from where the movement of the goods originate. As against this, in the same transaction, undertaken in the same manner, across the interstate supply of goods or services, the revenue will accrue to the receiving state where the consumption takes place. Through the mechanism or the indirect tax mechanism, interstate mechanism, the utilization and the GST portal apportionment of the IGST. So this is how there is a fundamental change in the way the tax are being levied, collected and apportioned among the states also. The advantages of justification which I just mentioned about can be taken as a litmus test as far as the GST is concerned, and whether GST is passing, the present GST law is passing this litmus test or not, we will see in a minute. Friends, It's unfortunate, but this law, a very badly drafted, hastily implemented, it is being equally poorly interpreted and arbitrarily implemented. And this is the state of affairs today. In the 30 meetings GST Council, they took 918 decisions, which resulted into issue of more than 300 notifications in a span of not even less than 2 years. There are already in 2018, we have 8 amendments to the central GST rules. 8 amendments only in 2018. There are already so many amendments. Extension, I'm not even talking about. How many extensions? We must have lost count by now. How many extensions of which returns have taken place? And how many times? So, every change brings the challenges. And a law like GST implemented in a country like India, which is unparalleled in the history and unprecedented in its coverage and the implications, cannot be without challenges. Agree. But then there are challenges which could have been anticipated, and the challenges which simply are thrown up. Majority of the problems associated with the GST today, probably unfortunately, could have been anticipated, and we could have been prepared for that. But now, I can only say that we are on the point of no return. We are not Malaysia, so we can't simply scrape this law today. Though I would wish that scrape this law today, go back to in the intervening some buffer period for 2 years or so, completely set your structure in place and then reintroduce the law. But it can't be done because the stakeholders, tax professionals, taxpayers, and as well as the tax officers, it has become our responsibility together to make this law work. With this preamble, let me start. And now I am fully conscious at this very moment that in coming whatever time we are with us, discussing everything, I will be opening up, unfortunately, but I will be opening up the Pandora's box amongst you. I will not be covering the audit related issue. No need to. Yesterday midnight, everything is happening in midnight in this country. I don't know, there must be some coincidence. So yesterday in the midnight, around 12 o'clock or so, day before yesterday night, sorry, the audit form 9C, they have all been extended up to 31st March 2019. Let us hope even 31st March 2019 is also kept. But as of now, so audit has become, and we are expecting a lot of amendments in the audit forms also. Hopefully it should be out by mid-January. So I would personally feel that today is not the right time to really dwell upon audit or audit related issues. Because audit is a very serious subject as far as the GST is concerned. I'll make it clear in the evening session. But not to waste too much time of it when we don't even know what is in the offing as far as the forms and the requirements are concerned. That is one. Friend, let us start with the taxable event. The taxable event, the essentials of valid tax levy have been well set out by the Supreme Court in Mathuram Agarwal, Govind Saran, Ganga Saran, as well as the B.C. Srinivasa Shetty's case. And in all these three cases, which have been followed recently by the Supreme Court in Larsen and Toubro, and again in the Surendra Kumar Bansal's case. The essential of the tax is the character of the tax which is determining the taxable event. When the levy of the tax, whether direct tax or indirect tax or any other tax, when the tax is said to be, levy is said to be arising, that is the taxable event. Person who is liable to pay the tax, taxable person, the rate at which tax is payable, that is rate of tax, and the valuation mechanism, that is the measure of tax. These four essentials of the valid levy, which have been laid down by the Supreme Court, have remained as of, and any of the element is missing, any of this component is missing, it is not a valid levy. This issue becomes, this essential will become important as our discussion progresses. So, and every single new tax, every single tax has to meet with this four essential. In this sense of the word, Section 9 of the CGST Act, which is the charging provision for the central GST, and Section 5 of the IGST Act, which is the charging provision for the IGST Act, parallel provisions of the UT GST Act and the State GST Act meet with this criteria, so we need not go into that. They've been well drafted, so they meet with this criteria of the essentials of the tax. Important thing is, what is the taxable event under GST? In the erstwhile indirect tax regime, prevalent at the central level and the state level, the taxable events in the context of excise duty was the manufacture or production of the goods. Section 3 of Central Excise Act 1944, there shall be levied a tax called the value added tax, central value added tax or the central excise duty on the goods produced or manufactured in India. So it was manufactured. Though the levy, the collection was postponed till the time of the removal of the goods from the factory. But the levy accrued as soon as the manufacture takes place. As far as the sale tax of the VAT or CST was concerned, it was the transfer of ownership in goods for a consideration. That was the taxable event. As far as service tax was concerned, just pre-GST, Section 65B, subsection 44, and Section 66, the charging section of the Finance Act 1994, the taxable event was the provision of service for a consideration. These three important taxable events which ruled the taxation kingdom across the country for 7 decades have suddenly overnight have become irrelevant once the GST was introduced, because the taxable event under GST is the supply of goods or services for a consideration. And the word supply is obviously a much wider word which encompasses so many things. So this is nothing less than the paradigm shift in the way the very taxability arises, and this is how it has been done. And for which constitutional framework was necessary, because excise was obviously the powers of the taxation can be traced to the constitution. No tax can be collected without authority of law, Article 265. And so Article 246, Schedule 7, union list, state list and concurrent list. So we have to look for the source of the taxation powers, any taxation, into any of these entries of these. And here, since GST was supposed to be levied concurrently by central and the state on the supply of goods or services, and the tax base remaining the same for both center and the state, a constitutional amendment was necessary because constitution did not provide for that. So Article 3, these amendments were introduced by the Constitution 101st Amendment Act 2016, and in that certain fundamental changes which were made. One of them, Article 366(12)A. I only refer to 2 provisions. Article 366(12)A, inserted through this Amendment Act of 2016, defines goods and service tax as goods and services tax means any tax. The word is any. I mean, it's a very dangerous word, but today I am not going into this. The implications of word any. Goods and services tax means any tax on supply of goods or services or both, except taxes on the supply of the alcoholic liquor for human consumption. So alcoholic liquor is completely outside the purview of the GST, unlike the 5 petro products which are within the scope of the GST, but for the time being the levy is suspended as far as petrol, diesel and other 5 products are concerned. Total 5 products are concerned. Article 269A says, is a new article, notwithstanding anything contained in Article 246 and 254, Parliament and subject to clause 2, the legislature of every state have a power to make the laws with respect to. However, it further says, Parliament has exclusive powers to make laws with respect to the goods and services where the supply is in the course of interstate trade or commerce. So as far as the interstate trade or commerce is concerned, only the union has got the powers to make the GST laws. IGST like. And further explanation to Article 269A says, for the purposes of this clause, supply of goods or services or both in the course of import into the country, territory of India, shall be deemed to be the supply of goods or services or both in the course of interstate trade or commerce. Only these 3 fundamental provisions, let us keep it in mind. The basic source of power in Article 366(12)A, that is goods and services tax defined. The second, The union's power to make exclusive powers to make the laws with regard to the interstate trade or commerce, and the deeming fiction introduced in respect of the imports of goods or services or both, which is deemed to be the supply in the course of import, interstate trade or commerce. These three will pervade the whole discussion one way or another. This is the constitutional framework. Coming to now the other part about the supply. I'm not going into the interstate definition, intrastate definition. These are all defined under IGST. I'm proceeding on the basis. This is a very elite crowd before which I'm honored today to be, and I presume that all of you have a sound and knowledge of the fundamental aspects of the GST. So my endeavor will be really to touch upon, to the extent possible, the certain important provisions and the issues arising out of the, on account of those provisions, interpretational issues, and how probably the courts or certain principles of law which have been laid down by the courts would help us to resolve those particular controversies. Section 7 of the CGST Act defines the term service and supply. And supply, the most important, the very taxable event, unfortunately, has been defined in an inclusive manner. And here lies the first major problem. Supply could have been defined like it says supply includes all forms of supply. And here the impact of the UK VAT Act, which defines the supply, can be seen here also. It's basically a fusion of the Canada GST supply definition and the UK VAT GST, the supply definition. So supply includes, it is not supply means and includes. And it says supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal made or agreed to be made for a consideration by a person in the course of or furtherance of business. So the elements which are emanating from this, as I said, this inclusive definition could have been much more specific and it should have been made exhaustive as far as possible. We have had 7 decades of disputes revolving around the term manufacture. The manufacture, which was defined under Section 2F of Central Excise Act as a manufacture, includes any process incidental or ancillary to the completion of the manufactured product. This was the definition of manufacture, which was the taxable event. And despite the sterling decision by the Supreme Court, DCM Sugar, South Bihar Sugar Mills case, Delhi Cloth Mill General case, Ponds India's case, Bore Industries case, and umpteen number of decisions where the Supreme Court has tried to explain the very concept of the manufacture, what manufacture comprises of, when the manufacture can be said to have taken place, which would invite the excise duty. Even today, the Honorable Apex Court is being called upon with the alarming regularity to decide what constitutes manufacture. We'll have to see whether the same fate will await the supply definition or not. And I have absolutely no doubt in my mind that the supply will be one of the most pivotal phrase around which the host of litigation will accrue in the coming days. I'm here reminded of the Voltaire, who says that let all laws be clear. To interpret the laws is always to corrupt them. One should not be required to interpret the laws. They should be simple and one should be. Maybe because of that our existence may become under danger. We may not survive if the laws become very clear and very simple. That's a different matter. But as a policy, as a principle, laws should be clear and specific. So, but anyway, we have to live with this. What are the 4 elements emanating from this definition? The 4 important elements of the supply definition are, one is, it is supply on goods or supply of services or both. The second, services. The third one is consideration, and the fourth one is business. These are the 4 important elements, essentials of the supply definition. And let us look at it. how it goes. Goods has been defined under section 2, subsection 52 of the CGST Act. And it says goods means and includes all types of movable property, but securities are excluded, actionable claims are included. Transaction in money are excluded, security is excluded, but actionable claims are included. It is an exhaustive definition. It says means and includes. So it's an exhaustive definition. Now, the Article 366(12) defines the goods to include constitution, any goods, materials or components. If you see the CGST definition, it is at variance with the constitutional definition. There could arise a possible area of dispute whether CGST's definition is in conflict with the definition of constitution, because it was much more than what has been contemplated in the Constitution. But granting the very viability of this definition, the propriety of this definition, it excludes securities, but actionable claims. We go back to Schedule 3. Schedule 3 to the CGST Act specifies the transactions which are to be considered neither a supply of goods or supply of services. They are outside the purview of GST. They are neither supply of goods nor supply of services. Schedule 3, the last entry speaks about actionable claims. So all actionable claims per se, though included in the definition of goods, Schedule 3 says actionable claims other than lottery, betting and gambling. The meaning, the implications are, except lottery, betting and gambling, all other actionable claims are outside the purview of GST. Factoring would be one of these. Factoring, which is an actionable claim. So, the lottery, very recently, Calcutta High Court decided in the Tista, I think it's a Tista's advertising case, that lottery is actionable claim and GST is applicable on the lottery also. We had a very huge and very long-drawn battle on the levy of service tax on lottery, where under service tax regime, government did not succeed, but here it has now received the constitutional validity. It's a recent judgment. So, securities. Securities has been defined to have a meaning as per section 2H of the Securities Control and Regulation Act. It has been defined in that manner. And the transaction, the word securities, nowadays in demat form only, the implication of this security being covered, excluded from the scope of goods, as well as from the scope of services, the implications of that we will also see on that. Next is services. Section 2, subsection 102 defines the term services. It says, services means anything other than goods, but excludes securities. It also excludes securities. Now means anything other than goods. What does this mean? There was a sort of a consternation when the model GST law was introduced with this definition in mind. And there was an apprehension all around that services means anything other than goods. In a lighter way, whether human beings will come under services because human beings are not goods. They are being sold and purchased as a goods in the day-to-day transaction. That's a philosophical part of it. But otherwise, but the main question, the apprehension on the minds of the people was whether immovable property will come under services. Because immovable property is other than goods. And the goods definition does not specifically exclude immovable property. And these apprehensions were unnecessarily, according to me, were taken to the government. And the result is this: the government came out with two exclusions, sale of land and sale of building, other than under construction units. Sale of land and sale of building have been kept outside the purview of the GST wide entry 5 of Schedule 3. Whether it was necessary at all or not, that's a different matter altogether. Have we invited the trouble by raising these probably warranted apprehensions that services will include the immovable property transactions? Whether it could have included or not, that was the first question. And the damage which has been done by seeking these clarifications, when we talk about the real estate sector issues, I will explain to that. The next one is about the consideration. The term consideration has been defined under section 2 subsection 31 of the CGST Act. It was never defined under the service tax law, though the service tax levy was also under consideration. Section 67 valuation provision of the Finance Act spoke about the levy of service tax shall be on the gross amount charged. And the consideration, and therefore reports had to be made to section 2 subsection 24 of the Indian Contract Act 1872 what is meant by consideration. Now consideration has been defined in a very exhaustive manner under the GST Act. There are certain nuances of the consideration which I'm just in a minute I will now take up one after one. And the last but not the least is the business definition. There is a very inclusive, wide-ranging definition of business under section 2 subsection 17 of the CGST. This definition is running into almost 8 clauses. There are different 8 clauses, inclusive definition, and here the problem will lie. GST is a business tax. It is known as it is a consumption tax. All indirect taxes are consumption taxes, but it is also a business tax, and that is made implicitly clear in the supply definition that the levy per se will get attracted only if the supply is for a consideration in the course or furtherance of a business. So if the activity is not for business in the course, then the levy will not get attracted even if there is a consideration. The first, keeping all these important definitions in mind, let us touch upon certain issues which are arising or which can arise. The first one is goods. Now, the Constitution, Article 366(29)(a) significantly has not been omitted. It still finds place in the Constitution post GST also. We know Article 366(29)(a) deemed sale. Gannon-Dunkerley, post-Gannon-Dunkerley, the 1982 46th Amendment. The works contra goods portion, we are aware of this, supply of food and drink and other specified transactions, which later on found ways into the state where they have adopted, obviously, all the state where laws have adopted it. This has not been omitted, even while, so it still retains the place. Now, contrast this with entry 6 of the Schedule 2. Schedule 2 of the CGST Act categorizes certain transactions into supply of goods or supply of services. It only categorizes, it is not a deeming fiction. So it only categorizes certain transactions into, and one of the transactions which has been categorized under this is the composite supply of works contract is defined under section 2 subsection 119 of the CGST Act, as well as the supply of food or drink other than alcoholic liquor for human consumption. These two have been granted as supply of service by entry 6 under Schedule 2. Now, Constitution Article 366(29)(a) considers the very activity of works contract, a transaction of the nature of works contract as a deemed sale, and entry 6 of Schedule 2 calls it the supply of service. Is there a conflict? Or whether Article 366(29)(a) post GST will operate only in certain selected areas for selected purposes, for the past assessment, or for any such purposes, why it has been written. So far, I mean, the very logical answer is eluding us, but it is still remaining a deemed sale, which has now been granted as a supply of service. Let me tell you, friends, from the theoretical perspective and from the international practice perspective, there is nothing wrong in branding such activity as a supply of service. Across the international arena, all the infrastructure related activities which are composite in nature, or even supply of food or drink in a restaurant or hotel or anywhere, they are all branded as a supply of service because it is the service which is dominant element of this activity. Even, I mean, we can look at it from another angle. Why the legislature had to declare it as a deemed sale in the first place? Because it was always a service. Northern Gujarat, Northern Caterers case, Gannon-Dunkerley case, it was always a service. The composite supply of the construction or any such works contract was always a service, and therefore when the state wanted to levy the tax on the material portion of that contract, they could not succeed, and therefore it had to be declared as a deemed sale. But when the service tax law came, and in 2007, 1/6/2007, when the levy of service tax was introduced on the works contract service via section 65, 105, ZZZA, the legislature did not have to declare it as a deemed service because it was always a service. For state sale tax purpose, they had to declare it as a deemed sale. And now the life has come full circle. Under GST, it has again become a supply of service. The only issue is about how far it is in tune with the Article 366(29)(a). Another issue in the context of services is whether the immovable property, I'll take it up when I take up real estate, the permanent transfer of the copyright, brand name, trade name, or other such IPR, and the temporary transfer, whether the distinction has remained any relevant under GST now. If you see Schedule 2, Entry 5H, entire that Entry 5 of Schedule 2, which categorizes the supplies or the transactions into supply of goods or supply of services, is almost replica of Section 66E of the Finance Act 1994, which is a declared service. And it has been practically reproduced here in Schedule 2. And here you will find temporary transfer of the IPR related activities like the brand name or trade name or copyright, etc. So temporary transfer becomes supply of service. Does that mean the permanent transfer becomes supply of goods? Because intangibles are covered within the scope of the goods, even applying the principle of law. But the question can remain. Similarly, the question can remain in the context of software. We are still trying to find the answer whether software is goods or software is service. The only hope one can really muster here is that somebody, some company, some day, some innovative person will actually invent or innovate some software which will resolve this puzzle that whether software is goods or services. So far that software has not come into the market. Nobody has been able to solve this puzzle, ever eternal puzzle. But intangibles like as VAT was applicable on it, here also, because Entry 5H speaks about temporary transfer only, and that has been branded, characterized as a supply of service, and therefore permanent transfer can go under supply of goods. In the context of supply and business, here I would take up some 2-3 specific issues, and that is the very close A, 1 and 2, mainly whether the trust or NGOs activities can come under the levy of GST, whether cooperative societies activity can come under the GST or not. If you see Clause A definition of supply of the business, it says business includes any trade, commerce, manufacture, profession, or let me again repeat it in a different manner. Business includes any trade, comma, commerce, comma, manufacture, comma, profession, comma, vocation, comma, adventure, comma, wager or any other similar activity, comma, whether or not it is for a pecuniary benefit. Pardon me with all these commas, I am sure you will all not go into comma, but comma has been one of the major reasons for some unbelievable disputes in this country, legal dispute, the very placement of the comma. And if you go through that, if you try to understand, one is definitely surely to go into comma. And here also probably the same fate awaits us. All the different expressions which are actually followed by comma, the last expression is wager or any other similar activity. The first question that can arise here is, what is the scope and meaning of any other similar activity? Whether that any other similar activity should be similar to wager, or whether it should be similar to trade, commerce, manufacture, vocation, profession, or any such adventure. This is the first question which can arise. Friends, applying the principle of law laid down, and very recently Orissa High Court judgment in the context of an excise duty case, wager or any other similar activity is sandwiched between two commas. And because it is sandwiched between two commas, any other similar activity has to be similar to wager and not to trade, commerce, adventure, profession, vocation, etc. It has to be read as a similar to wager and not other activity, and this restricts the very application of this particular definition, this particular clause. It means it is not an open-ended scheme whereby any type of activity can be brought under that it is similar to trade, it is similar to commerce, it is similar to adventure, it is similar to profession. No, it has to be similar to wager. A very interesting proposition, but worth fighting for. Whether the placement of this comma is wrong or whether it was a grammatical compulsion, that is for the legislature to ponder over. But we have to apply the principle of law. The second important question is about the trust activities. This is something interesting. The first clause speaks about all these forms of supply which are described, and it says whether or not it is for a pecuniary benefit. Clause B says any activity or transaction in connection with or incidental or ancillary to subclause A. So any other transaction which is undertaken as an incidental transaction but in connection with an activity of A. So first of all, there should be a principal activity which meets the criteria of A, which is the main clause. Simultaneously, I am undertaking certain activity which is incidental or ancillary to that main activity, which would fall under B. And the last clause is C. Any activity or transaction in the nature of subclause E. Again it says in the nature of subclause A, that is main clause. And it says whether or not there is a volume, frequency or continuity or regularity of such transaction. You can see that practically all these entire definitional clauses of this definition have been more or less patented or borrowed from the state-based laws, where the pecuniary benefit has been given a go by, whether or not pecuniary benefit, the volume, frequency, regularity or continuity have also been given. This has been there practically from 1964 onwards, when the definition of business became a subject matter of dispute before the Supreme Court, and Supreme Court have been actually insisting upon all these elements, essentials of the pecuniary benefit, volume, continuity, etc. They have been done away with. Now we see the rest of the clauses, none of the clauses actually cover the trust or NGO. Trust or NGO are covered by the person definition. But merely by that reason, can the GST be levied? And for that one is to answer whether the trust activity, a religious trust, educational trust, or any such trust which is founded for the purposes which are otherwise not for business, can it come only because the trust is covered by the person definition? That is the answer we have to seek for. The second question which arises here, if the trust main activity does not come under the business, but it has some other activities which are commercial in nature, will it make it liable for GST? That is the second answer, second question we have to see. Very briefly speaking, friends, answer to both. And here I am conscious of the fact that there is an exemption, serial number 12 of the notification 12 by 2017 GS Central Tax, whereby any entity which is registered as a charitable under section 12AA of the Income Tax Act for carrying on charitable activities is exempted. But here the underlying assumption is that the levy is existing and now I am exempting it. And we know exemption follows the levy, exemption cannot determine the levy. Settled law, Pinkish law in the Supreme Court. So therefore, the question here is, irrespective of this exemption or the scope of the exemption, can a trust activity or an NGO's activity be held to be liable to GST at all? if the memorandum or the charter or the objects of the trust or NGO clearly reflects that their main activity is not for the purpose of business, then it will not come under the GST at all. This is my view. Even though it is covered by the person definition. The second is, what happens if such trusts have some incidental activities which are actually carried on the commercial scale, and there is some income arising out of that. Sai Baba, Shirdi Sai Baba Trust, in fact that is the case I am going to refer to. Most of the religious trusts have their other activities in the form of brochure or video cassettes, lectures, audios, which are being sold. Some of them have the renting activity in the premises, though the renting in the religious premises are exempted. All these from where it might be undertaken. Applying the ratio of the principles laid down by the Supreme Court in a catena of decisions, the conclusion can emerge. It can be said that such incidental or ancillary activity which are undertaken as an incident to the main activity will still not make the religious trust liable for GST on the ground that it is in the business activity. Unless such incidental or ancillary activity itself is undertaken on a business scale or becomes a sort of a standalone commercial activity. I'll repeat. Unless the incidental or ancillary activity is undertaken or being carried on as itself is of a substantial commercial nature, it will not make the trust a business entity so long as its main activity does not come under business. One of the important decisions, if the Supreme Court is in the Sai Publication Fund, where Supreme Court, these are all in the context of the VAT or income tax. The Supreme Court said, but the principle apply. Sai Publication Fund 2002-4 SCC 57, where Supreme Court said, if the main activity was definitely not for the business, and these are all more or less the Supreme Court considered the definition which are practically pari materia with the current business definition, or at least the main nuances. And then they said the whatever catalog or the other activities from the trust was actually earning the money, like selling of the cassettes and selling of the certain things, etc. This will not make it liable to tax. Supreme Court also took note of one of the most significant judgment, historic judgment of the Supreme Court in the case of Board of Trustees versus Board of Trustees of Port of Madras. Most important judgment because this is the judgment which considered the legal position pre-1964 amendment and post-1964 also. When the pecuniary benefit, continuity, regularity, all these elements were done away with, Supreme Court considered all this. Port of Madras case 1999, 141 STC, 520 Supreme Court. Very recently, in a Sanmukhanand appellate, Bombay Income Tax Appellate Tribunal, Sanmukhanand Sabha, basically the most prominent Sabhagra of the country, 88% of the income is being earned by renting the auditorium. Though it is set up for educational and such other purposes, the IT authority sought to deny, after all, the charitable trust recognition to them. Section 11 benefit was sought to be denied. Matter went to tribunal. Tribunal said, notwithstanding such a substantial part of the income arising from the renting of immobile property, that is Sabhagra, it still remains a charitable organization and therefore the benefits are available to them. Sanmukhanand, it's a decision 7th March 2018. I don't have right now that citation. It has now been reported. Taxman and ITR, it has been reported. 7th March 2018. And I'm also conscious of the fact that recently Advanced Authority ruling in Srimad Rajchandra case, they have negated all these arguments. I will only say as far as Advanced Authority rulings are concerned, I would have loved to take up Advanced Authority ruling as a separate subject, would have not taken it. My only suggestion, my only request, my only probably observation here is, please think twice, thrice, 100 times before approaching the Advanced Authority ruling. For the simple reason that there are many better ways of committing suicide. So you will find many other ways. But don't select advance authority ruling if you want to commit harakiri. And there are, as of now, unfortunately, no backward rulings than the advance authority ruling in this country. The very constitution of advance authority ruling should not inspire any confidence in the impartiality, forget about the insight of the people manning the institution in this extremely complicated piece of legislation. So, having said that, it is binding advance authority ruling are not binding to all, therefore we will leave it at that. Cooperative societies, the fundamental question, the provision of goods by a cooperative society, unincorporated body, it is borrowed from the constitution, to its member for a subscription or cash or deferred payment is considered, it is covered within the scope of business. So far so good. The question here is two. One, whether principle of mutuality will apply as far as the cooperative societies are concerned. I am not going into detail. My straight view is this: principle of mutuality will continue to apply even under GST, and therefore cooperative societies, irrespective of the exemption granted, in respect of the maintenance below 7,500, again it becomes irrelevant. Cooperative societies per se do not come under the GST at all, because principles of mutuality continue to apply. Nobody can make a profit out of itself. The latest round of decision on this by Supreme Court, affirming this principle of mutuality and very well elaborate manner, Supreme Court has actually explained these principles are in the Sri Venkatesh Society's case, Venkatesh Premises 2018, Tax India Online 82 Supreme Court IT, where they have affirmed this principle and very well explained this principle of mutuality between the cooperative society members, and the principle fully applied as far as the principle is concerned. And the second is, if you see entry 7 of the Schedule 3, it says supply of goods by an unincorporated body to its members shall be considered as a supply of goods. That it says. It means cooperative society supplying the goods, it will come under supply of goods. Even if it is presumed for the sake of argument that cooperative society comes under the levy, what about the supply of service? Because categorization is only in respect of supply of goods. Constitution Article 366, 29A Clause E, from where this power to levy tax on cooperative has been derived, it says, it is in the context of cooperative society only. Article 366, 29A Clause E. A tax on the supply of goods by an unincorporated association of body or person to a member thereof for a case, deferred payment or any other consideration. It also speaks about supply of goods, does not speak about supply of service. Under these circumstances, where the powers come from for levy the tax on the supply of so-called services by a cooperative society to its members, assuming it is taxable in the first instance. Board has a very novel answer to this, and my respected brother will actually forgive me, but these are all the legal issues which I am discussing. There is no question of criticism. We don't get anything by criticizing, but we are trying to analyze the subject. The board issued a circular number 35 by 9 by 2018, dated 5th March 2018, answering this particular jigsaw puzzle, and board refers to all these. Business definition, refers to the Schedule 2, Entry 7, Constitution, and then board comes to the very, very simple answer. In view of the above, it therefore means that supply of service by an unincorporated body like cooperative society, it implies that it is a supply of service. Now, where the implication, from where have we started levying the tax on the basis of implications? How can it say it implies? Where is the authority for levy the service tax, GST on the supply of service? And almost all cooperative society would be engaged into, or said to be engaged into supply of service, and not supply of goods, unless it is undertaken. There also the issue arises. It's a very questionable, but then board can issue. This is another issue which definitely deserves from the legal fraternity very, very deep attention. Because cooperative societies have the host of the issues they are facing, including on the redevelopment of the cooperative society with the landowner, etc. board can come out with. There are golden rules which normally board follows. The first rule is that board or government is always right. That is the first rule. What is the second rule? If somebody disputes it, then don't ever forget the first rule, that you are always right. What is the third rule then? If you are proved to be wrong, then also you have to go back to the second, where you have to again insist upon that you have to remember the first rule, that you are always right. And what if the Supreme Court passes the board circular, since you were never wrong, then will you come back with a retrospective amendment? Because in the process you were never wrong. So this is how the law operates, or is being actually made to understand in this country. We'll have to live with this. There are other two important decisions on this aspect about the trust and NGO also. One is by Bombay High Court in 2017 397 ITR 501. It was a case of Sri Nasik Panchwati Panjara Board, where the sick and maimed cows were being maintained, and whatever was being, there was some additional income which was being arising. They were being milked, because if the cows are not milked at the regular frequency, they would actually become sick. And that was being sold at the market price by the Panjara Board Trust. Even after that, Supreme Court, the Bombay High Court said that it cannot, though the commercially it was an activity of selling the milk, it still remains a charitable activity, it still remains charitable trust. The levy of tax is not attracted, income tax. To the similar effect is the judgment of the Gujarat High Court in the Sabarmati Ashram Gaushala Trust 2014 362 ITR 539. Similar impact. Another small question, whether giving away or donating essentials to a charitable organization will amount to supply of the goods. The answer is no. Effective of the GST for whatever it's worth, but it is effective on the GST also says it is not liable to. Whether the use of the sale of the used car will attract, sale of a used car by an individual about 20 lakh will mean that the individual will be required to take the GST registration. If I have my personal car which I sell it for more than 20 lakh, the answer is no, because effective also says so with this specific example, because an individual cannot be said to be engaged into business activity. And here there is an implied, there is an acceptance that the element of business is a crucial. The other two clauses about the supply definition is, whereas consideration has been made compulsory, without that self-supply is still not a GST liable. Schedule 1 makes an exception, which says there are 5 transactions where without consideration they are deemed to be supply, and therefore taxability will get attracted. Permanent transfer of business assets on which input tax credit has been taken, transaction supply of goods or services between distinct person or related person, a gift not exceeding 50,000 rupees from an employee, etc. And these are principal and agent, etc. I am not going into that. These are deemed provision. Here consideration has been given a go by. That's a legislature prerogative, nothing wrong in that. The next is import of supply, import of goods, import of services for a consideration whether or not in a business, for the purpose of business. Import of services for a consideration whether or not in the course of furtherance of a business. So even if I am importing a particular service for myself and there is no business element, it is not required for my business purpose, and if I make a payment, reverse charge will be applicable. Basically, all the games and applications which are being suppose downloaded and on which remittances are made, even if they are made for the personal use, legally they become liable to tax here. And so far there is no monetary based exemption for this. Most of the time we don't do this, our children do this. At the end of the month when we receive the credit card bill, we come to know what our children have been up to, what they have been downloading. One may have to be a bit careful about such things. But here the business element has been given a go by. Schedule 1 consideration element has been given, has been dispensed with. And Schedule 2, please remember, Schedule 2 is merely a characterization or the categorization of the supply and in goods or services. It is not a deeming fiction. And therefore, agreeing to tolerate an act or agreeing to an obligation, which are one of the phrases which have been a subject matter of the whole dispute, on the basis of which advance authority ruling gave us ruling in the Shankar Bhanusali case, that the compensation given to the tenant for vacating the premises in respect of the redevelopment of the building or the society would come as an agreeing to tolerate an act. In my respectful opinion, this is an absolutely wrong decision. Because it is not a deeming fiction. It is not a deeming fiction, please understand that. And therefore, now the board has recognized this. Central GST Amendment Act 2018, which has already received the Parliament assent on 1st of August, they have amended this entire section 7, whereby it has been made explicitly clear that Schedule 2 is merely categorization of the supply. It was never intended to be deeming provision. And this amendment has been made retrospectively from 1st July 2017. That is very important. No doubt it has still not been operationalized because other states will have to follow the suit. But it has already been done. I don't know in the wake of this what will happen to such type of cases. They will not survive because this is a retrospective amendment, and if the decision is based by considering this as a deeming fiction, then obviously the decision cannot survive. Consideration, two questions. Whether the other taxes, duties, fees, etc. which are paid under for any other purpose will form part of the supply consideration or not. Section 15 subsection 2 only allows the exclusion of the GST, CGST and other cesses, etc. What about other taxes? It clearly says any other taxes, duties, fees or charges which are paid shall form part of the taxable consideration. This question can become extremely important in the coming days. For instance, in respect of the real estate transaction under construction sale of the property, stamp duty and registration, shall it become part of the taxable value? There has been a very recent decision of the European Court of Justice on these, and that was the case in the case of the Lisboa gas case. It was decided on 11 June 2015. I am referring to this decision because our valuation provision of GST are more or less patterned on the UK European weight valuation provision, where also it was made that any such other taxes will become part of the taxable value. Without going into the details of this case, the ECJ index, the issue involved before the European Court of Justice was whether other taxes paid by the supplier and collected from the receiver on actual basis are required to be added to determine the taxable value for VAT purpose or not. This was the very issue. ECJ answered this in affirmative and said that it is immaterial whether this collection of such other taxes it itself is a value addition for the supplier or not. The important thing is to see whether it coincides with the incidence of that levy that arises at the point when the levy arises. So, in simple words, ECJ traced upon the direct link with such taxes of paid and the supply. If there is a direct link, then such other taxes would form part of the value. Now, in India, I think Supreme Court is viewing it slightly differently. In the context of service tax law, there was never a problem because open market value was never a concept recognized under service tax law. Under VAT law, this issue has arisen. Other taxes which are paid can form part of the taxable value or not. In the McDowell case, first McDowell case, 39 STC 151, two judges bench said it cannot form part of the taxable value for VAT purpose or sales tax purpose. This was overruled by 5 judges bench's McDowell case in 59 STC 277, and they said it should become part. And then subsequent judgment in Mohan Brewery's case 107 STC, MRF case 108 STC. In all these cases, Supreme Court said all the other taxes which are paid will become part of the taxable value. But one test which has been laid down by the Supreme Court later, and that is important, Anand Swarup Mahesh Kumar, 46 STC 477, Guru Nandita Mar Shanti Prasad, 136 STC, and Chabra Rice Mill, 144 STC, 3 among the judgment, where Supreme Court said, if the tax liability is that of the buyer of the goods, such taxes should form part of the taxable value. If the tax liability is that of the supplier, it should not form part of the taxable value. If it is of the buyer, it should not form part of the taxable value. But if it is of the supplier, then it should form part of the taxable value. Now, pitted against the ECJ test, how the Supreme Court will resolve this particular issue in the Indian GST legislation in the coming days, you can see a lot of fireworks on this particular issue, like turnover tax being paid by the stockbrokers. This turnover tax is a liability of supplier. They are not it is not the liability of the buyer. They are being still recovered, whether it should form part of the taxable value. A issue which had arisen under service tax, issue which will continue to arise again under GST. So how the Supreme Court will resolve this, we will have to see this. The other is about the reimbursable expenditure. Whether reimbursable expenditure can still be excluded from the taxable value. As advocates, we are going for, anyway, we are at a reverse chart. So, but any such professionals who are actually incurring some reimbursable, some hotel accommodation, etc., I personally believe pure agent concept has been continued under GST valuation rules also, which was there in Rule 5 of the Service Tax Determination of Value Rules 2006. So, Intercontinental Delhi High Court judgment, where it declared Rule 5 as ultra-virus, has been upheld by Supreme Court in 2018 GSTL. And so, reimbursable expenditure can still be actually claimed to be excluded from the taxable value under GST also, coupled with the concept that the pure agent is there. Liquidated damages, another hot area of dispute. Whether liquidated damages, which is a compensation in monetary terms arising out of the breach of the contract. In a case of where ARS again given a ruling, it is an agreeing to tolerate. And as I said, they have treated it as a deeming fiction, and then said that because the Schedule 2 says agreeing to tolerate a situation, so by tolerating the breach of agreement by the other party, the supplier, you are getting the compensation, and that is, you are getting the compensation, therefore it is liable. I think absolutely wrong decision. Nobody agrees for the breach of the contract, first of all. I will agree to breach of the contract. In effect, we are saying this. I am entering into contract and I will agree to the breach of the contract. Contract is meant to be performed. Non-performance is only a safeguard, compensation. Liquidated damages is a compensation, it is not an activity by itself. There is no underlying activity under liquidated damages. It is a result of the breach of the contract, and therefore under no circumstances liquidated damages can come under the taxable purview. Then forfeiture of the amount, cancellation of the booking, airline booking, etc. Here also there are going to be interesting issues whether no-show and cancellation of airline booking will attract the GST or not. There are two decisions recently, one by European Court of Justice in Air France KLM and Australian High Court full judgment with the Australian High Court one decision into Qantas airline. In both the cases, ECJ High Court, they have said that this constitutes the consideration and it is liable. So the cancellation amount retained by the airline for the cancellation of the booking or the no-show also will attract the levy of the GST. In the context of hotel cancellation, ECJ in yet another case have said it is not liable to tax. And these are all going to be the raking issues of the dispute in the coming days. Contribution of capital by the partners, will it amount to supply? The answer is no. We have CAPEC judgment of the European Court of Justice into CAPEC Electronics, where they have said holding of the share by the company, holding company into subsidiary company for which dividend is received, can it be said to be liable to GST? The answer is no. Coming to now the next topic of input tax credit. Friends, input tax credit, I started with cascading effect of tax on tax, and this is sought to be achieved by providing for a seamless flow of credit. And if you see the statement of objects and reasons behind the GST bill, para 5B, it clearly says the intention is to provide the seamless flow credit, thereby avoiding the cascading effect of tax on tax. Have we lived up to that objective or not? That is the answer we will have to try to see. I'll just touch upon certain magic nuances of this because time is too short. The first is definition. Capital goods has been defined by section 2 subsection 14. The definition now is in a stark contrast with the definition of the capital goods which was prevalent under Rule 2A of Standard Credit Rules 2004 since 1994. And that definition, 2004 CCR, before that there was a moderate rules, Central Excise Rules. 2A definition earlier was by the description or the chapter heading under moderate or standard credit scheme. Now the definition says capital goods means any goods the value of which is capitalized in the books of account and which is used in the course of furtherance of business. This is one of the most pragmatic steps taken by we have been waiting for 15-20 years to have such definition. Because there was a complete dichotomy between the definition of the capital goods or the understanding of the capital goods under income tax and under standard purpose. What is capital asset for income tax need not be capital goods for the standard credit purpose. Because it was by description or chapter. If it does not fit into that chapter or description of Central Excise Tariff Act 1985, it will not be capital goods. But now, whatever value is capitalized of the goods, if it is capitalized, it will become capital goods. And that's a welcome feature of this particular aspect. The other part is, what the capitalization, now the income tax standard is very fixed. Beyond 1 year, generally it is not allowed to be taken as a revenue expenditure. What happens if a company capitalizes certain expenditure in the books of account? Can the assessing officer challenge that as per Income Tax Act, you should not have capitalized this and you have capitalized? So can the capitalization be objected in short by the assessing officer so as to deny the benefit? The answer seems to be no. There is one important ratio laid down in this case by the Supreme Court in the case of Apollo Tires. There was a case where the question of determining the book profit for the purpose of MAT liability under section 115J arose. The company had adopted the Companies Act standard derived at the program and they had provided for the arrears of the depreciation for the past period, which was objected to by AO, though allowed by the Companies Act. And Supreme Court overruled the contention of the revenue, saying that you are only being given a limited power to refer to the Companies Act. You cannot redetermine how the accounting computation should be done. The same ratio can apply here. If I have followed the accounting principle and Income Tax Act capitalize something, it cannot be sought to be negative on the ground that you should not have done this or you could not have done that. The second aspect of capital goods, obviously depreciation is taken of the tax component. To that extent, credit will not be available, fair enough. The other part is about admissibility of credit on the capital goods. If the capital goods on which credit is taken, credit is admissible. What if such taxpayer is engaged into the export of supply? Can he get the refund of the accumulated credit on account of capital goods? If you see, Rule 89.4, providing for the formula for claiming the refund of the tax paid, IGST paid on the export of supply of goods or services, debars the refund of accumulated credit on account of capital goods. In my opinion, rule is ultra vires section 54 in the capital goods definition as well as input tax credit definition. Neither in the input tax credit definition nor in the section 54, which is refund, there is any bar of the refund of accumulated credit on capital goods on account of export. So rule is, we are already in the process of, we have already challenged this. So rule 89.4, debarring the refund is already ultra vires. Conditions for availing the ITC, section 16, 4 conditions. There should be an invoice or initial document in respect of the supply of goods or services. 2, the taxpayer should have received the goods or services. 3, supplier should have paid the tax on the such supply. And 4, the registered person, that is recipient, should have filed the return under section 34. These are the 4 conditions. We will only concentrate on the 3rd condition, and that is supplier having not paid the tax. Can it be denied? Here friends, let me tell you, GSTR2 is suspended. It could not have seen the light of the day in the first place itself. We were too overconfident about it. Okay, we will do the mismatch and we will do this matching and all that. That matching never took place. It was always meant to be the divorce from the day one. It was never going to be the matching and marriage. So GSTR 2 is under suspension, GSTR 3 is under suspension, but section 16(3) still is operating. Therefore, the burden of supplier to pay the tax so as to entitle the registered person recipient that provision still remains. The question here is this: what is the validity of this provision if the credit is being denied on the ground that supplier has not paid the tax? We have been settled with this dispute under the VAT regime. We are all aware of this. This is a legacy from the VAT tax regime. There are any number of High Court judgments on this particular issue where High Court have struck down this provision. To give you few, Gerumal Lal Balchan 2012 to Supreme Court, SCC 781 Punjab Haryana, Sri Lakshmi Textile 2015 TIOL 2403 Madras High Court, Tata Motors Jharkhand High Court 294 ELT, Modi Oil Mill 2016 TIOL Gujarat High Court, Sri Alloy, Jui Alloys 302 ELT 407. I can go on this. The common thread of the decision in this is, the ruling of the principle laid down is this, that merely because the supplier or the seller of the goods have not paid the tax, the recipient cannot be denied the VAT credit. In my opinion, the same principle will continue to apply even under GST. World over, invoice, there are two methods by which VAT or GST can be introduced. Somebody can, three methods also somebody can. One is invoice credit method, second is the subtraction method, and the third is the capital addition method. World over, all the jurisdictions have adopted the invoice credit method. And invoice is the heart of the entire GST as a document, because it is on the basis of which I am declaring my liability, it is on the basis of which I am availing the credit, that underlying supply has been received by me. There is a presumption here. Now, as has been remarked by Richard M. Bird, one of the noted international experts on VAT, that invoice is the bearer check written on the government. And in our country, there are number of people, there are people and people who are out to encash this check. Invoice itself is being sold as a commodity, as we know in this country. So, all this 2,000 crore evasion and fraudulent invoice and fake invoice, every day it is hitting the headlines. There are GST otherwise is a very fraud-prone tax, friends. There are about 14 types of different frauds which are customarily associated with GST or VAT. Please don't ask me which are they. They are tabulated, I can't go on that. But carousel fraud, missing dealer fraud, these are fake invoice, non-reflecting the transaction, these are all common fraud. Because when there is a tax, there will be tax evasion, either by compulsion or by habit. There are people who are born with that allergy to the pay tax in their DNA. It is not in their DNA at all to pay the tax. So that will continue. And this is not our problem, this is the universal problem under VAT jurisdiction. The question here is how the European Court of Justice has actually seen all these aspects, whether in the carousel fraud or the person situated in the economic chain of supply suddenly disappears without paying the tax which he has collected, whether the next recipient can be denied or not. European Court of Justice has said no. In the Optigen case, in the Excel Kittel case, these are all joint cases, 3-4 parties are joined here. The sum and substance of the European Court of Justice principle is that unless and until the complicity or the involvement of the recipient in the fraud being committed by the supplier is established, the recipient cannot be denied the credit on the ground that the supplier has not paid the tax. And in my respectful opinion, it is this principle which will ultimately become the decider when we are faced with a similar situation under section 16(2) when we interpret the law. The point is this, I am fondly reminded of the one and only one Mr. Nani Palkiwala's words here, that it is the pathological obsession on part of the policy makers in this country that they make the laws only keeping few evaders in mind in the total disregard of the large number of the people whom the misery will be ultimately inflicted because of such type of provision. And then he sums up by saying that, and only Nani can sum up in this manner, when he says that a departmental store, a shopkeeper of a departmental store which is preoccupied merely with the the theft being committed in the store is a sure candidate for the stagnation. A departmental store, a owner sitting on the counter can't simply go on looking at the CCTV continuously, simply because nobody is stealing from my store. He will never prosper, never grow. So this is, as far as the mismatch is concerned, ITC negatively section 17 subsection 5, motor vehicle, club membership, rental cab, these are all legacy from the past, and we have continued with this legacy. Unfortunate. Where is the seamless flow of the credit across the goods or services? Why this restriction? Section 17.5, subsection 5, clause C, works contract service. Unless it is used for the works contract service, credit is not available. Goods or service is used for the construction of an inbound property other than plant and machinery, even if it is used for the business purpose. So I as a developer construct the building, give it for the renting on which I am paying GST, I cannot take the credit on the GST paid on the goods or services, unless it is capitalized. Why all these restrictions? We are still continuing with the old regime. The next is about the apportionment of block credit. I will only say, I mean, these are all subject by itself, but I will only say that section 17 subsection 3. GST intended to avoid the cascading effect of tax on tax. It does mean that if the final activity does not attract the tax liability, credit cannot be made available. And that is fair enough. It was earlier in Rule 6.1 of Standard Credit Rule that is, and the proportionate credit was 6.2, 6.3, 3A formula. Now, so if there is a 100% activity which is taxable, I utilize the goods or services, I am 100% allowed for the credit. If it is 100% going into exempted activity, I am not allowed for the credit. But if there is a common usage of the goods or services for a taxable activity and non-taxable activity, I can't be given full credit, I can't be denied full credit. And then comes the question of the apportionment or block credit. This is contained under section 17.1, 17.2, read with the formula prescribed under the CGST rules. And here, the GST law has gone one step further, keeping with the international practice. There are two provisions. One, any goods or services which are used for business purpose and other purpose, then proportionate allowance is required. Or any goods or services which are used for the taxable activity and exempted activity, it is required. And 17.3 says, for the purpose of this exempt supply, value of exempt supply, value of sale of securities, sale of land and sale of building other than under construction buildings should be included. This is very important. It says sale of securities. In other words, suppose a proprietary company or even a taxpayer company, business entity, indulges into the proprietary trading into the shares. This trading into the securities will have to be treated for the purpose of determining value of exempt supply. I have to identify common services like chartered accountant service, auditor service, management consultant, security, telephone, on which I am taking credit, which I cannot identify with the taxable supply and the security, my proprietary trading into the security. I have to apportionment. What is important is security is outside the purview of the GST. It is a non-taxable supply. Exempt supply includes the definition of exempt supply includes non-taxable supply. It says exempt supply means a supply which is chargeable to nil rate of tax or which is exempt under a notification or on which tax is not payable under this Act or under IGST Act. This is the definition of the exempt supply. Now, so whether non-taxable supply will become exempt supply? Answer, in my opinion, no. Had it been yes, then there was no need to specifically give a deeming character to 17.3 saying that sale of securities shall get included, sale of land shall get included, sale of building shall get included. This is the points for the pondering. And on the other part about any goods lost or destroyed or stolen or otherwise disposed of by way of a free sample or gift, that is mean no credit is being allowed. In the erstwhile excise duty regime, suppose there is a petro products which are being or any chemicals be due to during transition, due to loss of moisture or evaporation loss, I receive tax is paid on the entire quantity. but the quantity received by me is less. Can it be said this is the goods loss, therefore credit should be proportionately reduced? In all the erstwhile region, including PKP and spinning mills, tribunal decision and Supreme Court decision in Indian oil case and others, the answer has been no. In my respectful opinion, ratio continues to apply. But again, this will see these are all going to be the major areas of the dispute. The disposal by way of a free sample, 1 plus 1, buy 1 get 1 free, buy 3 get 2 free. Is it a free? Can it be said it is free? Is it a gift? A gift is voluntary, without any quid pro quo. Supreme Court, Sonali Bhatia's case. So here there is a contractual obligation. When something is emanating from the contractual obligation, European Court of Justice, McFail case, very latest case, what is gift? Something is coming from the contractual obligation, it loses the character of being called as a gift. So when I am buying one, then only I am getting one free. So one which is given to me free is not a gift. It cannot even be considered as a mixed supply. So the question of attracting highest rate of duty to that does not arise. According to me, it is purely a quantity discount. It is simply a quantity discount deductible from the taxable value. And the free sample, physician sample given by the pharma companies, earlier they were paying excise duty on this. Now the question is, if these are given free, whether the tax will be payable. Going by the credit, the question here is denial of the credit. Unless it is sold to the related person or distinct person, credit will definitely the value, it will have to be subjected to GST. Because it is without consideration, but deemed supply. But if it is given to the independent distributors, whether still the credit will be reversible under section 17(5)(h). The question here, the free sample, to the unrelated buyer or distributor, what should I reverse? Credit taken on the free sample or credit taken in respect of the free sample? I am manufacturing medicines, I am manufacturing sample also, which I have to give to the doctors. Credit I am taking is on the raw material and packing material. The 17(5) says credit in respect of. What is the meaning of in respect of? In respect of is means on, or in respect of is in relation to. Swastik tobacco factory, Supreme Court says in the Indian context, in respect of is on. If I take this interpretation of on, then I have not taken any credit on free sample. I am manufacturing sample. Credit I have taken on the raw material. It will lead to a very absurd result. If it is on the motor vehicle, I am buying motor vehicle on which I have taken the credit. Then I am not entitled. So motor vehicle, it is on. Free sample, it is in respect of. In my opinion, to apply swastik tobacco factory, which some learned experts have been inclined to do, may not be correct. You may have to apply this ratio, keeping the context in mind and the individual clauses. Somewhere it could be on, somewhere it could be in relation to. But having said so, how do I determine the proportionality in relation to free sample? How do I determine? There is no valuation mechanism provided. I go back to Govind Sir and Ganga Saran, I go back to Mathuram Agarwal, I go back to B.C. Srinivasa Sethi. Valuation mechanism not provided, and therefore the entire charge regarding reversal of credit fails. Coming to the third part, and that is place of supply of service. Friend, place of supply is an extremely technical subject. For a moment I was deciding, I was contemplating. I have actually prepared PPT, but there appears to be the PowerPoint presentation. And I am glad because I am not very comfortable with PowerPoint presentation. But still I have prepared them. I have them, at least 3 PowerPoint presentations which I have prepared, which contains much more than whatever I have discussed today up till now. Input tax credit, place of supply, as well as the concept of supply in the taxable person through our organizing entities. TAAB, I will have them circulated to all of you. I am sure Mr. Sanjeev will take care of that. So all my PPT will be with you. The So I am only going into the basic philosophy behind place of supply, which would be very, very important for us to understand. Place of supply has its roots into the destination principle of the GST. It is a destination-based consumption tax. In other words, where the consumption takes place decides the taxing jurisdiction for the purpose of levy. As I said earlier, world over the policymakers have been grappling with the issue whether it should be destination-based or whether it should be the origin-based. And finally, they have based their entire policy on the destination-based tax. And therefore, place of supply rules become extremely important. And here, the entire rules, which are mainly patterned on the basis of the cross-border guidelines issued by the Organization of Economic Cooperation and Development, OECD, in November 2015. OECD is at the forefront of basically devising, discussing and providing for the various policy-related issues concerning the GST or VAT across the world. A member OECD, 29 countries including India. And they are at the forefront, followed by World Bank and including somewhat IMF. So these guidelines have become very important. It is on the basis of these guidelines that the current place of supply rules, which are contained in the IGST, have been entirely based. More or less, the previous guideline, the support had been taken under service tax by way of the place of provision of services rules 2012. That was POPSR. But in the context of service tax, place of services rules become hardly relevant except in cross-border transactions. Because service tax was a union legislation. Right across the country, service tax was levied in a single manner. So it doesn't matter where the recipient is situated and where the consumption is taking place. But in GST, particularly because of the dual character of the GST in India, place of supply rules has got absolutely vital role to play. It is the most important cog in the GST wheel. And I look at it from three perspectives. One is the constitutional perspective, second is the destination principle perspective, and third is the taxability perspective. As far as constitutional perspective is concerned, we have already seen that for interstate supply, the powers lie with the union only to make the legislation. The very explanation also mandates that union shall apportion the tax collected in the form of IGST on the interstate supply should be apportioned with the states as per the formula devised by the council, right, as permitted under the constitution. And therefore, since it is a consumption tax, we need to have, even for our domestic transaction, the place of supply rules will become important to determine whether it should be liable to IGST or whether it should be liable to CGST, CST. In other words, whether it is interstate or whether it is intrastate, because the revenue should accrue to the consumption state. The place of supply has been defined under CGST Act as defined under Chapter 5 of the IGST Act. Chapter 5 of the IGST contains Section 10 to Section 14, which contains place of supply. And these sections among them actually have 32 provisions prescribing the place of supply in respect of the supply of goods and supply of services depending upon the nature of the transaction. Total 32 scenarios have been covered under Section 10, 11, 12 and 13 as far as the place of supply is concerned. So one is the constitutional perspective. Coming to now the destination perspective, as I said, the destination principle became important over a period of time. As far as the supply of goods are concerned, there is no difficulty because goods are tangible, goods can be followed, touched upon, inventorized, stored, etc. So it is very easy to determine where the consumption is taking place. But for the services which is intangible in nature, to determine where the consumption takes place is absolutely an impossible task. In the initial days, there were no problems. But with the exponential growth of the service sector across the world, with the complexities of the transaction being increased day by day, and with the multinational corporations coming into the fray, which they with their myriad legal structure, providing services from one country through another provider into another country to a service recipient in the third country, it becomes extremely important. How do we determine the place of supply in the transaction? An MNC headquartered in Singapore, engaging a service provider on behalf of its group companies across the world, and the service provider situated in US to provide the services to his another counterpart in India to a service provider in India. How do we determine the place of supply? And this is the day-to-day realities. To give you an example, and there this place of supply provision have become an extremely important in the international trade also, in the domestic trade also. The guidelines important like this. They are freely available on the Google. The GST or VAT guideline cross-border transaction by OECD. And with example, very well written, very elaborate, extreme. And still the work is going on. Because the law has to keep the pace with the time. As it's been said by Edmund Burke, one of my very favorite, when he says, law must be stable, but it cannot remain static. Stability of law is always welcome, but it cannot remain static. So it has to keep the pace with the time. So many things are going to happen on this particular front. So the destination principle is recognized in this place of supply, which has become. Another aspect is about the taxability perspective. Section 77 says of the CGST Act, if a transaction is considered as a interstate, an IGST paid, but if it is later on held to be intrastate, then the taxpayer will have to first pay CGST, SGST, and then claim the refund of the IGST. Fortunately, without interest. Similarly, if the transaction is considered as an intrastate, CGST, SGST is paid, but if it is held to be considered as an interstate, then IGST will have to be paid first, and then claim the refund of CGST, SGST. It is therefore extremely important to determine whether my transaction is interstate or intrastate, and for which place of supply rules become extremely vital. Three questions should always be kept in mind here. What is the nature of supply? Whether it is interstate or intrastate. Second, what is the subject of supply? Whether supply of goods or whether it is supply of service. Because place of supply rules for supply of goods are separate and supply of services are independent, separate. And third, category of supply, whether the supply is a B2B or whether the supply is a B2C. As far as it is a B2B transaction is concerned, the businesses are merely acting as a pass-through. GST or VAT was never intended to be levied purely on businesses. Businesses were only supposed to be acting as a pass-through. Ultimate burden has to lie upon the consumer. And another issue which is actually right now under active deliberation across the world by the policy makers is, if the businesses are simply supposed to collect and pay to the government, why so much complexities and disputes are being faced by the businesses in the matter of GST and VAT, instead of the consumer who is finally bearing the burden? And from there the complete policy is being looked at afresh, how to mitigate all these legal disputes connected with the GST. This is going on right now. So this goes through character of the GST, whereby the businesses merely act as a window from where the tax will pass to the consumption. We have to determine. That has to be kept in mind. Because place of supply for final consumption would be different, and the through intermediaries to be placed on the final consumer will be, scenario will be the different. And on this, take a case of intermediary. Intermediary has been defined so as to mean, intermediary means a person acting as a broker or agent or deal trader agent or any, there are mercantile agent and there is so many other forms are given, and then finally it says that or by any other name, by whatever name called. But it will not include principal to principal supply. The latest decision which has created, 2 days back it hit the Economic Times also, all BPOs are being sent the notices based on the advance authority ruling in V-Server Global Limited case, where the activity was held to be carried on as an intermediary and therefore liable to tax here, even though the service recipient was outside India and the consideration was coming under foreign exchange. Because in case of intermediary, the place of supply is held to be the location of the service provider, that is supplier of the service. In India, this is nowhere. In India, we have chartered, we have departed from the basic wisdom that an agent situated in India, providing services to a principal outside India, earning the foreign exchange, will not qualify for export of service for the purpose of GST. He will be liable to pay GST here. These provisions were actually amended and introduced on 1/10/2014 under service tax, and it has been continued under GST. I have not been able to understand the logic behind this. If a person situated in India, a manufacturer, availing the services of an agent outside India for selling his goods across in the world, he will not be liable to pay the tax under reverse charge mechanism, unlike in other cases. He is availing the services of a foreign agent. Still he will not be liable because the place of supply is an intermediary, it's a location outside India, so no liability. But in an indenting agent situated in India, he will be liable. Two questions here. Is this valid classification? Is it discriminatory? Is it going against the fundamental of the GST policy? These are the questions which have now been raised before Gujarat High Court in a recent writ petition. Day before yesterday, 7th March 2018, Gujarat High Court has issued a notice in this particular case to the government. Matter is coming up in January, challenging the very provision of intermediary whereby the levy is fastened upon the Indian agent situated in India, providing services to the principal outside India. Second, V-Server, even if you very carefully analyze the facts might revolve around its own case. It cannot be made a simpliciter, a yardstick to tax all such people who are providing the back office support or financial transaction related support in India. Because the very definition says a principal to principal activity will not get covered under the intermediary definition. So if both the contractual arrangement is between principal to principal, then intermediary definition will not apply. The term, by whatever name called, has to be understood as a nocissure solicitis or justem generic. It has to take its color from the remaining word, that is agent, broker, trader agent. If the person is not said to be acting as an agent in whatever capacity, if it is a principal to principal, intermediary definition cannot apply. And the principal agency relationship, there are umpteen number of judgments under by Supreme Court, section 22, 23, 24 of the Indian Contract Act, where they have laid down the principles. The last issue about, I'm not going into too much into place of supply. The last and only two issues, I'll just finish in another 15-20 minutes now. Real estate sector and the confluence of GST and income tax. Real estate sector, without hesitation I can say, this is one sector which has been facing real problems since the advent of the GST in the country. It was very much hoped that with GST, the builder developer real estate sector will breathe easy. Unfortunately, that hopes are so far belied. Certain issues arising in the context of real estate builder are, the first and foremost is, I will start with the very levy. Is the levy on GST on the sale of the under construction units valid itself? That is the first and foremost question. Whether the levy on the developer builder itself is constitutionally valid. This is the first question which arises. We are aware that taking the legacy forward from the service tax regime, any under construction unit where any part of the consideration is received prior to issue of the completion certificate will attract the GST. Entry 5B read with entry 6 of the schedule 2. It will attract the levy of GST. The point is this: can the levy be attracted on the immobile property? Simultaneously with this question is whether transferable development rights, whether the supply or sale of the transferable development rights, TDR, whether it can attract the levy of GST or not. In other words, can it be said that both are transactions, even the sale of the under construction unit and sale of the transferable development rights, both are transactions in immovable property? Can it be said? And whether the levy is attracted or not? There are various ways of looking at this major issue which is being fought upon. We are fighting, this is being fought upon. The one is the very Article 366 12A. GST is any tax on supply of goods or services. Therefore, immovable property transactions are per se outside the purview of GST, constitutionally also. Second, the state's power, taxation power to levy the tax on the buildings or any activity which is exclusively coming under list 2, they are still intact, and therefore directly or indirectly any tax can be levied on the building or not. That issue still remains. It is now before the constitutional bench, 7 judges bench in the Mineral Development Corporation case. It is still not decided. Very recently it has been transferred, followed by SR Steel judgment. So it is before the constitutional bench. Third, the para 5B merely says that before completion certificate, any consideration received, it will be treated as a supply of service. As I said earlier, Schedule 2 is not a deeming fiction. Here, can the Schedule 2 be as a charging provision? Is it permissible for Schedule 2 or any entry thereon become charging provision by itself? Because it was never intended to be a charging provision. Unlike Schedule 1, where it says it should be deemed to be supply even though there is no consideration. That is third. The fourth is, there are two competing entries, works contract and construction related. 5B speaks about construction, 6A speaks about works contract. Works contract is defined under section 2119 and it includes construction, renovation, repair, maintenance, installation, erection in relation to immovable property. Therefore, any works contract activity in relation to movable property is still outside the purview of the works contract definition under GST. That should be kept in mind. Like a repair and maintenance of software, it will not come under works contract, though it is a works contract. But for GST, it is not a works contract. That aspect should be kept in mind. Now, works contract is a genus of which construction is a species. So, for the construction entry, rate of tax provided is 12% with input tax credit but without refund. Whereas for works contract service, if I classify, which I am entitled to, it is 18% with full input tax credit, I can even get the refund. These are two competing entries, mutually exclusive. It is permissible for the builder or developer to go under works contract, pay 18% and take full credit. And even if required, refund also. Or he can go under 12% provided the land value is included, but no refund of accumulated credit. Now, the question here is, whether it is works contract or whether it is construction, ultimately it is the levy is on goods. It can only be on goods and not on immovable property. The other aspect is about the TDR. The TDR is, I am sure all of you must be aware, it is a benefit arising out of land. It cannot exist divorced land. It is a benefit arising out of land. Neither land nor immovable property has been defined under CGST Act. So we take the definition of Transfer of Property Act, we take the definition of General Clauses Act, we take the connotation from the Income Tax Act, we take the definition of Land Acquisition Act, all the connected enactment, the sum and substance is that the development right is a benefit arising out of the land, therefore covered by the definition of the land, therefore it is an immovable property. And ownership in a land is a bundle of rights, Supreme Court, Central Bank of India. Any of these rights can be separately alienated. When I am transferring an ownership, I need not transfer. It can be one right also I can transfer. Here I am transferring the development right in favor of the developer for the commercial exploitation of the property. But at the same time, in effect I am transferring completely the ownership also, which may not be required also. So therefore, transferable development right for a consideration given to the developer either under an area sharing arrangement or revenue sharing arrangement or both, combination of both, is basically a transaction in immobile property from the landowner to the builder. Bombay High Court, Sadodai case, Bombay High Court, Cheda housing case, where they were gone into this development rights. Now from the builder, suppose he gives the constructed area to the landowner or developer for the obtaining the development right. Is he liable to pay the tax? Can the transferable development right TDR received by him be considered as a consideration in kind received before construction? In my opinion, the answer is no. Builder is giving the complete constructed area for obtaining, where he agrees to give this constructed area as agreed upon. For obtaining the development rights, this is an exchange of the immobile property. Immobile property in the form of TDR against immobile property in the form of the constructed area. It is a pure exchange of the immobile property. And if you see the immobile property definition, the exchange definition, the transfer of property act, it is a other than in money, when one thing or both the things are actually transferred against each other. So this is basically, and the other part is consensus ad idem. Both parties have agreed to. Both parties have agreed to, I grant you the development rights, you give me the constructed area post CC particularly. So both parties have agreed to, that is become also very important. It is not permissible for the revenue authorities to impose their own understanding into the commercial obligations, commercial understanding of the parties. Supreme Court disco. Supreme Court said Department Revenue Officer need not decide both the parties are commercially coming to the conclusion. They should not write their agreements. They should not interpret their agreement. It is for the parties to decide. So both parties have actually agreed to, I am giving you development right which is immobile property, you give me constructed area which is a immobile property, it is in exchange. And the last question here is, then what happens to notification 4/2018 Central Tax dated 25th January 2018, whereby the developer is actually allowed a facility to pay the GST at the time of the allotment of the constructed area to the landowner. This notification virus has been recently challenged in the Bombay High Court. Matter has not come up. Point here is, notification per se presupposes the levy, existence of the levy. The development right is liable. It presupposes that. That is the main point, and that is illegal. This notification is issued under Section 148. Section 148 allows the central government to, by notification, provide for a special procedure for a class of people. It does not entitle the central government to notify the point of the time of supply. Basically, this is a time of supply notification. There is no rational classification. From many angles, this notification is ultra-virus. Section 148, it is ultra-virus, the basic Article 265, it is ultra-virus Section 7 and 9 of the charging provision. So merely because I am given, the landowner is given the facility to pay the tax at a later date, it does not become a sacrosanct, no liability arises as far as the development is. Coming to the ITCA portion, assuming the levy, what happens if the builder is actually obtained the development rights, he constructs, part he is giving free of cost. Similar thing happens when the redevelopment of the society takes place. Part he is giving to the original members or tenants, rest he is selling in the market. Is he required to reverse the credit pertaining to the free of cost allotment to the original landowner or the original tenant? In my opinion, the answer is no. He is immediately not required to reverse. This will be, if this is treated as a sellable area, this is a contractual obligation. There is no provision in law whereby such contractual obligation where the free of cost is given, the liability, the reversal provision will get addressed. There is a ratio of the Vasanta Green judgment of the South Journal Bench of the Tribunal on this case which would come into play here. In a normal case also, if the developer is constructing and selling the under construction flat, and certain flats he is selling post CC, because after 2 years with the recession in the market he may not be able to sell it immediately. When he sells it post CC, whereby no liability of GST is attracted, is he required to go back to his original credit and then reverse the proportionate credit? Again, my answer is no. When a builder is selling any units post CC, at that stage, at the time of that sale of that, it will become an exempt supply. There is no doubt. It becomes an exempt supply. If it becomes an exempt supply, in that year, he will have to give the impact to section 17 subsection 3. So if he has any other taxable supply, say in 2022 he is selling certain units post CC, and 2018 to 2021 he is selling under construction. He is taking the full credit. Now, whatever credit he has taken, he has discharged the liability under construction sale up to 2021. But 2021 onwards, everything is post CC. Then in 2021, whatever unit he is selling, if it becomes an exempt supply, vis-a-vis his taxable supply during that year, he will have to apportion the common inputs credit in that year, provided the same provision remains. He need not go back to his original credit and then reverse it. So basically, there is no provision of law. The input tax credit, it does not depend upon any future uncertain event. I have to determine my eligibility on the basis of the law prevailing today. Once I have taken it as per law, it cannot be varied unless permitted by law. Supreme Court, Eicher Motors, Supreme Court, Daiichi Karkarya. It becomes my permanent asset. Yes, in the year in which I am selling it, Gujarat High Court, this is one of the issues which we have. We have challenged the very IGST levied on the EPCG. Goods made imported under EPCG contract between 1/7/2017 and 13/10/2017, when the export scheme were all suspended, IGST was collected. Then it was restored on 13 October. Our contention before the Honorable Court is, for 3.5 months, the government cannot be said to have suspended the scheme which was for there 30 years. So considering the objective of the scheme in mind, the subsequent restoration should be treated as retrospective. In the process, we have also challenged the very levy of the IGST, which our reading says IGST cannot be levied on any imports in the country on the goods. It is completely illegal. There is a complete disconnect between the IGST provision and the custom tariff act and the custom rate. The very levy of IGST is constitutionally not valid, it seems to be. Matter is coming up on 23rd January in Gujarat High Court. We have filed the other repetitions in the Bombay High Court also on the very point under EPCG and all. So there are issues and issues. It is an unfortunate state of affair that in a span of not less than 2 years only, there have been so many petitions on so many crucial issues before different high courts. There are reported more than 200 decisions as of now of the High Court under GST. Some of them are final, others are at the interim stage where the notice has been issued to the government. I am in the process of tabulating a template. Probably we are planning a session on this complete half-day or full-day workshop on judicial development under GST as Kolkata, somewhere in the middle of the January. But this shows how badly the law has been conceived and drafted. Never in the history of any taxation legislation, at least with my limited experience, I have seen a legislation being shattered with so much of litigation, and that also at the High Court level. It shows that there are no answers available in the law. People are not trigger happy, that they are simply rushing to the High Court. If the statutory authorities with their constraints can't give the relief, they have to go to the High Court. So I have tried to touch upon major areas. I said in the beginning that I am conscious that I would be opening up the Pandora's box, and I am definitely probably open up Pandora's box. In just a couple of minutes, I will share that very beautiful, interesting myth behind this Pandora's box and conclude my talk today. I am sure few of them you might be aware. Pandora's box is the word which we have been using in our day-to-day transaction. Another synonymous phrase is proverb. Phrase is basically the can of bombs, as we say. So there is a very beautiful Greek myth behind this. There were two brothers in the ancient times, Prometheus and Epimetheus. Prometheus basically stands for foresight, and Epimetheus stands for hindsight. Both these brothers were given a mandate by Both these brothers were given a mandate to distribute different traits and qualities to the animals of the universe, including mankind. So Prometheus went on to this task, both the brothers went on this task, started distributing different traits and qualities to the animals. When it came to the turn of the mankind, they ran out of the stock and they had nothing to give to the men. Men, being the supreme animal of the universe, needed something extraordinary. So Prometheus went to Zeus and stole fire from Zeus and gave it to the men. The Zeus was very angry. Prometheus was captured and he was actually tortured to no end by Zeus because of this misadventure of Prometheus. He was confined to a prison, confined to the imprisonment where a vulture will every day will come and eat his liver. But Prometheus has a blessing or curse of the eternal life, so he would still survive. But his torture continued till he was relieved from this by a 12 days war. That is another story associated with myth associated with this. Continuing with our original, that Zeus' sense of vengeance was still not satisfied because of this misadventure of the Prometheus, and therefore he summoned all the deities and asked them to create a Pandora. Basically, with due respect to all of you sitting here, there is no offense made to any of you. Pandora stands for woman. So when Zeus wanted to take the revenge, he remembered woman. He remembered Pandora. And that's why it is said that hell hath no fury like a woman scorned. This proverb has also its roots in this Pandora story. So Pandora was created. All the deities give her different traits. And with these traits and qualities, in a box, Pandora was sent by Zeus as a game plan to Prometheus' brother Epimetheus. And Prometheus knew what was actually the game plan of Zeus. So he had warned his brother Epimetheus that you remain away from Pandora. But this is a myth, a very beautiful myth, a meaningful myth, that obviously they had to meet. It was not only a question of meeting, that it was also a question because mankind, whatever, 10,000 years back and 10,000 years now onwards also, the fundamental basic emotions, love, passion, lust, greed, anger, prejudice, it will continue to drive the mankind as it has been always in all these thousands of years. So maybe in those days also it was a dil hai ke manta nahi. So therefore when Epimetheus met Pandora, I mean he succumbed to his feelings and obviously they might have married. Another portion which his brother had advanced to him was never allow Pandora to open that box. And Epimetheus took that very seriously. So he cautioned Pandora never to open the box which she was carrying with her, maybe as a dowry. But Pandora was a woman. She was asked not to open the box. She had to open the box. And that is why it is said, curiosity killed the cat. That was also his roots in this Pandora story. So she opened the box, and from that box came out all sorts of unspecified evils like death, misery, drought, and sickness, and plague, and all. There were evils came out, and it gripped the entire universe. Pandora was afraid. She immediately shut the box, and one thing remained inside which could not come out. But because of this misadventure of Pandora, the mankind continued to suffer for an interminable period of time. And thereafter, once again, Pandora had an opportunity to visit that box. She opened that box, and from that box, the one thing which could not have, which had not been able to come out, that came out, and it is said, and that was hope, Asha. And that is why it is said that okay, when you are in a miserable times, when you are feeling difficult times, when you are feeling challenging times, it is the hope which keeps you kicking and alive. With my 2 hours discussion on GST, if I have made your life miserable, I am sure hope is going to keep you kicking and alive. Thank you very much.